You don't need an income to get a tax credit, although you do need to file a tax return, says Mark Steber, Chief Tax Information Officer at Jackson Hewitt Tax Service. He talked with NBC4 about the changes in the law, who benefits, and how much they stand to receive.
Well, the child tax credit's been around for decades, and it's a very popular tax credit for all types of taxpayers. Many tens of millions take advantage of it every year. And historically, it's been about $2,000 per child. Well, starting with the American Rescue Plan Act of 2021, which was passed in late March, the law changed and changed considerably. The first part of the change is that it's a much bigger credit for potential taxpayers in tax year 2021. It's as high as $3,600 per child, ages 5 and under, and they raised the age on who qualifies for 6 through age 17. It's now $3,000, again, up from $2,000. And they even left in the architecture for the old credit, the $2,000. If you don't qualify for the $3,600 or the $3,000, if your age or your income doesn't allow you to withhold or qualify, you can still qualify for the $2,000 credit. So the first pitfall that many taxpayers are likely to experience, and we're seeing it already, even though it's new, is just sheer confusion. I've got a child. Which credit do I get? Well, it depends on age. It depends on the dependency classification. Is it your dependent? Do you share custody? It depends on your income level and so forth. So the amount of the credit is dependent on several variables. There's another interesting part that's also brand new for taxpayers, that the plan is to start this year, starting in July, to advance some tax credit to select taxpayers and give them a portion of their credit, up to half, monthly, starting in July, which then they'll reconcile on their 2021 tax return next tax season. But in its simplest level, larger tax credit, millions of more people will qualify for a larger amount. They've also made it totally refundable, which is a dramatically big shift change from the old credit, where you could offset your liability and then get up to about $1,400. The new credits, $3,600, $3,000, $2,000, fully refundable to the qualifying taxpayers. And so it's a lot different than it's been in the past, a lot more confusing than it's been in the past. But frankly, it's a lot better for taxpayers than it's ever been in the past, if they qualify. No income required whatsoever. So it is a tax credit, and it does go against your income taxes. But in the event you zero all those out or have none because your income's so low or your deductions are so high or you qualify for other tax benefits, you still can get this new credit, the new child tax credit, fully refundable on your tax return. It'll come in two parts depending on how it works. And we haven't really seen guidance from the IRS. But in its simplest form, let's just talk about a moment how the credit will work for regular taxpayers, ignoring, if you will, the advanced payment. Next year, when a taxpayer with qualifying dependents files their tax return, high income, medium income, low income, zero income, if they have qualifying dependents aged 5 and under, they will put simply on their tax return, after they fill out some of the questions and the required information, name, social security number, typically relationship, number of months in the home, those types of questions, you'll qualify for up to $3,600 in refundable tax credit on your tax return. So if you had zero income, low income, divorced, unemployed, laid off, injured, unable to work, you will get $3,600 per qualifying dependent refunded tax credit on your tax return. Now, as the law is written, if it was on the tax return in 2020, the current year tax return, and it looks like you probably will have the dependent next year, the IRS is going to advance half of those monies to the taxpayers in the same venue that they got their refund this year, direct deposit or by check or through some account or some other means to get their tax refund. That's how they'll get the advanced payment. But ignoring all of the advanced payment part, $3,600 for 5 and under, $3,000 of tax credit ages 6 to 17. And then if you age out and you still qualify because of your income, you can get up to $2,000 in tax credits. But if you're one of the unbanked or underbanked, you can still get a paper refund check mailed to your house like they have for decades since the law was first passed. Now, it will not come automatically. You will have to file an income tax return, a 1040, to put all that information on there, the name and the dependent social security number and relationship type information. That's always been the case too. So it's not an automatic payment like the economic impact payments or the stimulus payments or the recovery rebate credit. It is a tax credit just like it's been for almost 100 years now. You'll put it on your tax return. In prior years, though, you would be limited to your income tax or your tax liability offset, and then the rest used to just go away and you didn't get to take advantage of it. Under the new law, that money will be sent to you regardless of your income level or your tax liability or other information on your tax return.
How about is there a limit to how many children you have?
There is no limit on the number of children. There is a limit on the amount of income that you can earn. Starting at about $150,000, you start losing portions of the credit. It does phase out for higher income earners, at least the $3,000 and the $3,600 credit. The $2,000 former credit, it goes up to $400,000 in income for married couples and $200,000 for married or single couple or single taxpayers. So different moving parts on who gets it and how much. But the good new credit, totally refundable regardless of number of children or any level of income, but it does phase out for higher income taxpayers.